Beyond Meat reported earnings last week and the stock rallied by about 25%, taking the market cap to $633 million. With over $1 billion of debt, the enterprise value is just under $1.6 billion. Although Beyond Meat went up last week, it's not obvious why. Revenue in 2023 fell 18% to $343 million, and the company posted a gross loss on those sales of $83 million. So before the company has spent a dime on research and development, sales and marketing, and other costs, it's already in the red. The company has been trying to cut back, but the numbers are simply not working. Even using Adjusted EBITDA, the most favourable metric possible, Beyond Meat is nowhere close to profits. The company probably needs to get to $150 million in Adjusted EBITDA to have a chance of refinancing its convertible debt, which comes due in March 2027. At that point, if not before, it seems likely the company will have to file for bankruptcy. Bond markets are aware of this pressure. The convertible debt currently trades at just 22 cents on the dollar, which suggests the odds of bankruptcy are likely above 80%. To top things off, the company just filed to delay its annual report, which is usually considered a red flag. So if Beyond Meat is in such bad shape, the question is, why did the stock move higher last week? One answer is that the stock is so heavily shorted that the act of short sellers covering their positions likely pushed the stock up. On a related note, the cost of borrowing Beyond Meat shares is now so high it's become too expensive to short. Borrowing costs moved past 300% last week, and some brokerages will actually pay shareholders to lend out their shares. Management did say that it can get gross margins into positive territory next year, but that seems like an unlikely scenario. It is worth noting, however, that at one point Beyond Meat did look much more promising. Adjusted EBITDA was positive in both 2019 and 2020, and revenue growth was solid. However, the pandemic wreaked havoc on the company's supply chain, and consumers stopped paying up for plant-based foods. Low margins and intense competition have crippled many a food business over the years. There is, of course, a slim chance that Beyond Meat can avoid bankruptcy and provide upside to shareholders, but to do so would require an impressive turnaround. There's no evidence of that happening, and so there's no reason to buy the stock. But these are my personal opinions, not financial advice, and I hold no position in Beyond Meat. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.